Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors. November 3rd, just before the close today. I'm with Shaun Burgess, Portfolio Manager on our bond desk. Shaun's going to give us a little bit of insight, some transparency to what he saw fixed income-wise this week in terms of interest rates. But let's take a step back to last Friday. The title of last Friday's video was Looking for a Spark, or Searching for a Spark. In terms of what that meant is positioning had gotten so negative, all we needed was news that was not considered bad. Didn't even have to be good. So when we have kindling sitting on a forest floor, and I think I mentioned kindling last week, and we get the Treasury coming out earlier this week and not having to offer as much in terms of bonds, as many bonds as was feared with the budget deficit we have. And then we get some of the jobs reports, not that they were blowout great, but they were better than worst case scenario. And with positioning, it's vital to take that into consideration in your portfolios. So I do think that we, more than some of the other videos and analysis I watch, we try to concentrate on portfolio construction and where the market is positioned. And we saw that this week. The market, in hindsight, was just too negative.
Way oversold.
Both on the equity side and the fixed income side. So now the easy lift is done, right? The easy lift was off of some benign news, not as poorly as feared, and we got a rip.
Yeah, it didn't take much.
In bond prices. Remember, bond prices rip higher as yields go down. What are some of your thoughts on some of the commentary this week from what our desk thought versus what came out? Because we've been nibbling on that long side for a little while now.
Yeah, we've talked about the value of 5% tax-free. We talked about the taxable equivalents, what that means for a resident of New York or California, right? How attractive that looked. And you know what? Paid dividends this week as you said. A rip and rally, right? Off of, Treasury news, not going to issue as much. Powell coming out with some comments that you could take as somewhat dovish, really depend on how you interpreted it, but a pause and an indication that they're going to be data dependent, this continued idea of they're going to be looking at the data, the inflation data, and making changes appropriately off of that. That was all it took for the market to soar higher, because it was, as you said, off of some really oversold levels, especially on that long end.
The long end had just been hammered. Yeah. As a matter of fact, we look at a number of things in our analysis, and the short position in TLT, which is an ETF that mimics or represents the long end of the Treasury bond curve, it's 20 plus Treasuries, was showing in terms of short position really extreme levels. When you also identify speculators in the futures market, something that gets ignored often. The futures market, it trades in fixed income as well. Everybody thinks about futures as what's the S&P futures before the open, right?
It's a much broader market.
Much broader, deepest market in the world. The speculative short position in long Treasury futures was extreme. So again, was the news fantastic this week for bonds? Not really. But in terms of where the positioning was, you caught a snapback. And Shaun, we talk about this often. Every downtrend, and we were in a steep September, October downtrend. Every downtrend is broken by short covering first. And that short covering will either wear itself out over 4 or 5 sessions, and that's where we are now.
That's where we are now, yeah.
Or that short covering will create fear of missing out.
The next leg,
or
right?
FOMO, and more money comes in. So next week will be interesting. As I said, that easy spark of kindling we saw this week. I mean, equity markets up 5-6%. Small caps, which have been brutalized, up 7%. That's a snapback rally that if you weren't positioned for, and we have cash, it's not as if we were fully positioned, you have a tough time chasing.
Yeah, I mean, you look at the 10-year, it went from about a 490 down to a 456. That's a huge move. And October was so ugly that it was not, I don't want to say, never say bound to happen, but as you said, didn't take much. From here, we're looking at what inflation does. I think that plays a much bigger role in what the Fed's going to do going forward. Going to be very data dependent to see whether this, as you said, is a rally that has legs, or if we might give some back from here, because the rebound was, the sell-off was so gnarly. The rebound has been just as kind of significant, you should say.
Sure.
So we'll see if it can hold.
So what did we do during the week? Important for our clients to know. On the equity side, we've mentioned that we've had cash. Really not a problem with cash in the 5.25 range. U.S. ETF did do some nibbling this week, opened a semiconductor position on Thursday. It has been a sector that David has traded in.
Yep.
And then added some Nasdaq 100, QQQ.
The Qs.
Maybe you can comment, Shaun, on a move we made for our clients in the floaters, right? We have been taking advantage of shorter-term cash and floaters, and the investment committee made a decision this week that maybe it was time to lock in some of those rates.
Yeah, on the taxable side, went from our Treasury, or went from our floater position, which offered a really nice anchor to the portfolios, to the 2-year Treasury in light of our broader outlook, So, and it paid off this week as we saw rates come down. So a very nice addition to the portfolio.
Good. So I'm sure next week will keep us on our toes.
We're hoping, yeah.
And in terms of what to look for next week, there'll be continuous news. Some of that oversold condition has been worn off, making the markets now do some of the lifting on their own.
Yeah, we're going to be very cautious as we look to put money to work. We still think the long end has some good value. We don't think it's rich by any measure, but we definitely want to be careful because you want to get a good feel for directionality before you really commit. So treading lightly as we look to next week.
Great, Shaun. Thank you. Everybody, thanks for joining us. Enjoy the weekend. We'll see you next Friday.